Good morning, David. Thanks for joining me here on today's podcast. Welcome, everybody. We've got David Smeriglio, a real estate veteran. And for the viewers and listeners, David, can you please just tell us a little bit about yourself, how long you've been in the industry, what your main focus is?
Hey, Rick, how's it going? Thanks so much for having me. We talk all the time throughout the years. Hate to say it's the years, but I was recently trying to remember where we met, and it was like 20 years ago. No, maybe not 20, maybe about 18 years ago. And you guys had, which street were you guys living on?
I think it was was it Radisson?
Yeah, Radisson, that's right. And my mechanic had a rental property on that street, and I put it for sale, and you came by the open house.
Yeah.
And I remember it was a really great conversation. And then I came over to see your house with my partner Roland at the time, and we ended up listing your house, and then your neighbor's house, and it was just like this rolling thing that I've always appreciated, that you gave our name to other people, and then we kept up the relationship ever since.
For sure. No, you've been great.
Level.
And talk about small world. You know my cousin, and
that's right.
Another friend of mine as well. So wow. Yeah,
it's funny how it all came together, and which I probably should have figured out because your cousin's last name is Ruta as well. But it took about 5 years to figure that out. But anyway, myself, I've been in the business since 1998. So this October will be 24 years for me. And I've been very fortunate, Rick, because I have to say that it's been relatively a bull market in real estate since I started. So it's been an upward trending market. There's been a couple of downs along the way, as you know, like the 2008, 2009, when the crash in the United States was a kind of a tough time. A little bit of a blip in 2017 when the new rules, the stress tests came in place.
That's right.
And now I don't even know what you want to call this market, but this madness that we're seeing in the last 2 years. So it's been both exciting and humbling.
For sure. So on that note, that's the hot topic now in the listings. Would you say that the whole, GTA market, that the real estate is cooling down now? What's your views on that, or what does the evidence point to?
Well, that's a great question, and it's something that I've been struggling with for a while, just like you and probably your listeners and anybody who kind of follows real estate on a regular basis. I listen to the news as well, and stuff coming from, information coming from my peers, as well as newspapers and everything, and also what I see anecdotally myself.
Right.
And I would say that yes. I mean, looking at the increase in interest rates, which was the first kind of factor in there. So the qualification rate, when it's applied to the bell curve of people buying, the high end probably is not getting affected by a few blips in the mortgage rate.
Yes.
But the first time buyer, second time buyer, condo, they can't help to be affected when they actually cannot qualify or have a more difficult time qualifying based on the stress test. But that and harken back to one of your last podcasts with Marco Albanese, when he spoke about fixed rates and mortgage rates, that's a really important factor as well, because there's been a shift now with the 5-year rate, which is the most common one that most people go for. I've been doing a couple of those myself. I don't think I'll do it again.
Right.
Now being at 3.79%, the qualification is nearing 6%, 5.79 and higher. So people who can qualify for those are now shifting to variables or shorter term rates, as Marco had pointed out in the previous in the mortgage video that you guys did. So
right.
So has it fully affected? No, because there's still the opportunity. The mortgage rates haven't fully affected it because there's still the opportunity now to drop into a variable rate. There's still money out there that can be obtained fairly cheaply. So I don't know if that's been a big factor. Not as much as people would anticipate. And I know that on the 13th there's going to be an announcement of a further increase. I believe 50 basis point is what's anticipated. Could that affect it? I think in terms of qualification, not really, again, because of the availability of falling into the same category as it was before, which is 5.25 or less for the variable in 2 years. But then it's going to come down to what people are willing to spend, because obviously with those rates going higher in a couple of months, they're going to be affected, and their affordability is going to, or what they're willing to afford is going to come down.
If you like it so far, hit that like button.
I believe just a jump in 50 basis points is, depending on at $1 million, could be about $300 or $400 difference. I did a quick look last night, and there was in the ITSO board, there were 8 sales that happened just last night, and of those 8 sales, every one but one was above asking price.
Oh, still okay.
Every single one went over asking price. And so I'm going to continue to look at that, because I think we've settled down now with this rate increase and the March break being over and things kind of spring coming on more, also the perception that there's more properties coming onto the market, right? Which is true. Like we're at our actual, I believe, and don't quote me on this, but it's pretty close to where March 2021 was, even though we plummeted with inventory throughout the months after that, or
right,
especially in the spring and so far this winter, into the winter sun. So inventory is up, but yet we're still getting over asking. And another thing that people have been bringing up as well, you're still getting over asking, but you're not getting many offers.
Right. I was just going to ask.
Offers.
Yeah, I was going to ask that, because up to a few months ago, I was, you look at the news and you talk to people, and it's like a lot of buyers seem to be frustrated, because there'd be, they'd go look at somewhere and there'd be, 8, 10, sometimes even more offers. Has that been now, reduced, where now there's just a couple,
I'm definitely seeing that, and this is where, again, anecdotally, like, we don't have the aggregate data over months and months to compare it to what was going on in February. I know it was just February. Like if you looked at mid-February, like, that was that time that you were just speaking of. Okay. That was still going on, right? So we have a month's worth of data with, a March break that came in there with a rate that changed, so things are kind of settling down. So absolutely, I have seen that those amount of offers has come down. And in turn, if you're working with a buyer who sees that, you think that's a positive thing, but if they're also a seller, that also spooks them a bit, because they're thinking, well, then my property is going to experience the same thing.
Well, that's a good point, because there's a flip side of that coin where that's an excellent point. You've got one side, the sellers saying, oh, wow, now I'm not getting as many offers. Maybe, I've got to not maybe overprice it, or maybe they have a different strategy going in. But at the same time, so would you say that now is, especially with spring, more people listing, would you say it's actually a decent time for buyers now that things are pausing? Or...
Yeah, and again, market to market things will change. So in markets where there is historically low inventory, some pockets in Toronto where there's one house that comes up every 2-3 weeks, if that. Right. I don't think that's going to make much of a change. If there's one or there's two, there's still such a lineup of buyers that it's not all of a sudden going to split in half. It's just going to be one buyer's going to get the house that came up, and then the whole lot moves over to the next house if it's within what they want it to be. So, but yeah, there is more inventory, and what I'm starting to find is that houses that are awesome, great houses, that are upgraded, that are not, in have some sort of detracting feature, backing onto a major highway, a train track, in the past, let's say in February, those houses would have been gone regardless. But now there's a bit of attrition in the market where people are like, well, we'll wait, because we don't necessarily have to buy the house that's on the train track, or on the, if we get that house for the right price, then we'll go for it.
Right.
whereas a month ago it's like there's nothing else on the market, we'd like to move,
Yeah.
and this is what we're going to go for. We'll put up with it.
What about conditions? We've heard in the past where, to your point here, people are going in and it's like, no inspection, no financing condition. They're just like whatever they can to get that upper edge that, to be able to lock in and improve their chances. Are you seeing now a little bit of, well, you know what? I'm going to go for it, but I want that financing condition. Maybe now, especially with rates going up, or you know what, I am going to take that home inspection just in case.
I've seen it twice. I have seen it a couple of times, but for the most part, again, when looking at the statistics from last night, where 7 out of 8 properties went over asking price and sold within the first 3 days. And then just a brief look at Toronto, where I believe it was in one area that I was looking, there was 17 out of 23 properties, 17 went over asking.
Wow.
I'm saying it might happen, but it's still not at the point where it's a regular feature.
Yeah.
So that there is that downturn a bit from February, but I would say in general it's still motoring along, but I'm going to go out on a limb and say the prices have stabilized, if not come down a little bit, and we'll see in the next month if that comes to fruition, if that's the actual statistics that come up. Again, just from my perspective, from my buyers, it looks like it has settled down a little bit. Where that falls, in some buyers' mind, it's gone down 25%.
Right. Yeah. And sometimes you see the sensationalized headlines where it's like, where they, some people got to be careful here. Can you just, where sometimes people to, sell the news, they get these headlines, they say, sales down 20%. Well, what does that mean? That doesn't necessarily mean prices are down 20%. And again, it's very regional, as you said. So when somebody has this big headline, sales down 20%, well, does that just mean in one little pocket of something that, the volume of sales has gone down a bit?
Yeah, that's got to be very area specific as well. I mean, there could be aggregate data over time to show that there's been a decrease in the amount of listings, and that's something that's clearly, you can look all over the internet and find these statistics.
Yes.
I believe one statistic that I saw was that we were down in January 2021. We were down 40% of where we were in January of 2020. Which makes sense, because January 2020 was actually a pretty good market for January generally. And then in January of 2022, we were down 40%, but not from 2020, from 2021. So that's like an 80% drop in listings during that time. That's a huge drop in listings. So yeah, sales were down. It's inevitable. There's just no listings. When you're down 70, 80%, like, yeah, where are you going to go from there, right? So, but prices were going up because there's nothing to buy, right?
Yeah.
So now with supply. Less supply, which is something that we've had for a very long time. We know that going back, to when my career started, that it started to be evident in the Toronto area that there was not enough supply. So despite all the buildings that we've seen come up, I mean, if you take a picture of downtown Toronto then and now, it's incredible. Like how many Mississauga, Etobicoke, the Lakeshore, it's just building after building that's going up. And now I'm in Burlington, and out here in Burlington, there's signs everywhere for buildings that are going up, and Oakville's had their pockets that are going up.
Even Brampton, I'm seeing like new condos coming up in Brampton and stuff. So it's incredible. But even with all these, would you still say that we're still not enough supply for all this, all this immigration, all these people coming to Toronto?
And I would say that that's a great conversation to have, on another podcast, because there's so much to say about that.
Right.
Do I think that the supply is the cause of property prices going up 40%, 50%, if not more in some areas. No, I don't think that's the sole cause. It's not just lack of supply. I think it's buyer psychology, and we are experiencing that right now because my buyers are they don't want to, they still don't want to sell. Like I need to break the news to them today that the last couple of days that I've been looking at what's going on in the market, they're all going still over asking.
Yes.
And then they should feel fairly safe putting their house on the market and expect it to go over asking as well. And as long as we're all trending in one direction, everybody feels safe. The moment that there's that shakeup where it's like, wow, is this going to affect it? Is this going to affect it? Then all of a sudden, people feel shaky. They don't want to put their house in the market, and there's even more pullback on supply, right? So
yeah,
it's a buyer psychology. It's kind of like this cat and mouse game, where people won't list until they buy because there's not enough inventory to buy, and it's actually it's relevant because if you go back, let's say that you were thinking of listing in January of this year,
right.
I could not at that point recommend to my client, my listing club, buyer and seller, right? Somebody who's selling and buying. Now, if you're just getting into the market from renting, it's a different story. But the majority of buyers that I work with are people who I've sold houses to already, and now they're selling and upgrading. They've had more children or downgrading. Some of the older people are sort of downgrading, right?
Mm-hmm.
So would you, for most of the buyers that are upgrading, would you put your house on the market first in January? Well, the scenario, if you went back 4 months from January, the increase in prices were so drastic that you could potentially put your house on the market, sell it very quickly in multiple offers, and think, wow, this is crazy how much money I got for my home.
Yeah.
And then go to buy a house and also be in those same crazy bidding wars, not buy a house for 3, 4, 5 months, right, or have to overbid crazy money in order to get it because now you're kind of stuck and you need to sell. You need to buy. You got nowhere to go.
Yes.
Right?
Yeah.
But even an even worse scenario than that is 4 months passes and the value of houses have gone up beyond what you sold your house for. So now you don't have as much for a down payment, and you may not even qualify for the house if you don't get it in a certain amount of time.
Right.
Is that clear? Yeah. So you sold for $1 million and thinking to buy to 1.4, but in the 4 months that 1.4 jumped up to 1.6.
Yeah, that's a good point.
That's what I've seen is that there's not the motivation to sell first. It's been taken off the table, and when you have if nobody wants to sell first, guess what you don't have?
Yeah.
You don't have listings.
Exactly. That's right. So I'm not going to hold you to this, and I know you're not a fortune teller, but in your view, and again, this is again just an opinion. If we were to look, 6, 12 months, maybe even a year and a half, 2 years down the road, like do you foresee a crash in real estate, speaking about the GTA and surrounding areas? I mean, some people have that on their mind. They're thinking that, and some people are a little freaked out about that. Do you actually think we're going to have like a 20% crash coming in real estate or something like that?
That's a great question, and I'm going to say this, that it comes down to perception again, right, of what a crash is. So last night, I was paying attention. Unfortunately, my clients did not. Well, fortunately, my clients did not want to participate in this. In this offer date for a home. It was an absolutely gorgeous home. Like this home, like 10 out of 10.
Right.
And my clients wanted to see this home, and I just knew that the price that they had listed it was just a ruse. Like it was just silly, like it was maybe $400,000 less than where it needed to be. But sometimes it's good when people are new in the market, they need to see it for themselves.
Right.
And I wanted to see it, just the backyard oasis alone. I think I wanted to see it, take some notes for myself.
Yeah.
Anyway, so offer date, they held offers, no preemptive offers. last night they received 16 offers on this property.
Whoa.
Amazing, right? It's
Yeah.
still going on. 16, not surprised though, considering how much below asking price it was. And then, so I told my clients, it's they had 16 offers, and they're like, that's ridiculous, right? Like, why don't they just price it at somewhere close to where they need it to be, and not play games with people, right?
Exactly.
Anyway, I got a notice last night around 9:30 that they'd accepted none of the offers.
What?
None. Yeah, they're putting it. They're reevaluating it. But so the 16 offers, they still didn't get what they thought they were going to get. Okay, so what does this have to do with predicting the future, right? It's perception, because to them, to the listing people of that house, the market's crashed, right? Like, it's gone down quite a bit.
Put it that way.
that 16 offers didn't bring to fruition what they wanted, right? So it's like, well, like to them, they thought they were going to be, is there a market crash if they expected, I'm just going to throw some numbers out there, but let's say they expected 1.5, but out of 16 offers, they got 1.35. That's $150,000, right?
Yeah.
That's 10% drop over what they thought they were going to get.
Right. Yes.
So to them, there's been a bit of a crash. I think Mark Albanese put it in a really good way a few times to me. Is is there the potential for a crash in the increase that's happened in the last 2 years?
Mm-hmm.
I would say in that increase, which is substantial. We've gone up. I don't want to quote the statistics here, but I mean it's substantial, 50, 60, 70% in some areas, 30 on average, 30, 40% across Southern Ontario, right? And that's something that we've never seen before. So, will these measures, monetary measures, lending measures affect that? I would say that there should be some effect to leveling out, or maybe even coming down a bit. I think that buyers, just like the buyer sellers, just like the seller last night, you may find people that are resistant to that. Mm-hmm. So if the reaction is that there's going to be, sellers that are not willing to sell now because they're not getting the 40% that they would have got in February, that could put further pressure on the market.
Right.
Less listings. But I think that there's just a natural, there's some people that need to sell for various reasons, whether it's loss of job or divorce, or they're not pleasant reasons that have to sell, and they're going to have to put that on the market, death and whatnot. So, I think that incredible surge probably will come down. Will it reach the levels? Yeah. Sorry.
So at least a slowing, or maybe not as rapid of growth as we've been experiencing.
Right. Will it go down to pre-pandemic levels? That'd be interesting, because that would be considered in all, in irregular times, that would be considered drastic.
Right.
If you come down 30% over a course of a year, it sounds drastic, but prices were already quite high 2 years ago. Yeah, there's already a supply issue 2 years ago. So, it's going to be interesting. And you're right, I don't want to predict the future, but I think that if the wheels of real estate start moving again, meaning people are willing to put their houses on the market first, and there's more of a balance, that there will be some decrease in pricing as more volume comes on and there's more trade. But if it goes the other direction, where people don't want to list because there's an expectation, that prices should be where they were, or they're not. You're expecting a 40-50% increase, and now you're only getting a 25% increase. That could cause the opposite effect. So it's going to be really interesting to see where levels
a lot of factors playing out, and there's always that government intervention, different rules requiring a bigger deposit. We'll see where interest rates land. So it's again, a lot of moving parts. So for the listeners and viewers, I feel fully confident to, again, refer you and encourage them to reach out to you, because you do have, you're a full-time realtor with a lot of experience. You got your finger on the pulse. And if they needed to reach out to you to, get your advice, ask questions, perhaps use your services to buy or sell in the Golden Horseshoe area, Toronto, GTA, what's the best way for them to contact you? Of course, I'll list your information, but.
Well, I am on most of the social media channels. I'm on Instagram and Facebook are the two main ones there. I am on LinkedIn as well. I can be reached through my website, which is myrealtordave.ca. Quite simple, myrealtordave.ca, and then my information's out there as well, and you're welcome to post it.
Yep, I'll have it on in this video and also in the description of the video. So again, it's been a pleasure having you on this podcast. Really appreciate your time and your expertise as always. And hope you have a great rest of the week, David. Thanks a lot.
Thanks, sir.
All the best. Take care, Dave.
All right, take care.
Hope that helped. Love to share this free information. Your only cost is a free subscribe and a free like. So if you would do me that kind favor, I'd greatly appreciate it, so I could bring more of this content to more people, helping you to build your wealth. Bye for now.